Hi everyone, welcome to another video by Optionables. My name is Saket, and in this video we are going to look at what exactly is happening to the markets, what we can expect from the markets the coming week, as well as what positions we are holding. So what is our market view? So without wasting time, we'll be quickly starting off with what exactly is happening to the markets. So what we can see post budget is that the markets have become extremely volatile. So when you look at the FII DII data, FIIs are continuously selling from almost 4 to 5 months, and the thing is, the net sell figure for January is close to 40,000 crores, the highest in the entire previous year. So this as a number is pretty significant, and obviously it will have a huge dent in the market. And on the other side, there is DIIs who are constantly trying to support the market. So whenever there is a dip, they are buying into the dip and trying to support the market. So this entire situation has made the markets extremely volatile. So what is happening? Let's say in the morning session, DIIs start buying, the market will go up higher, and FIIs immediately come and sell, it will push down the market. So the entire volatility has increased quite a lot. The only problem is the short straddles are not pricing in the volatility. So if you see Nifty short straddle, they're hardly pricing in close to 250 points. And 250 points is hardly nothing for Nifty. Every day it is moving close to 200 points. And including 4 days, that is Monday, Tuesday, Wednesday, as well as Thursday, it is pricing in 250 points. If you see in one way, the market is just moving up, down, and more or less staying in the same range, but the overall volatility as such has gone up quite a lot. So this is one problem what option traders are mainly facing. So now if we look at the sectorial indices and what exactly is happening to the stocks, when you look at the tech stocks, so they are showing relative weakness. That is expected because they had run up quite a lot, and now there is some sort of profit booking happening in tech stocks, and money is moving more towards the banking sector. So if you look at the overall broader picture, it has become pretty hard to trade because the moment you do adjustments, the market is becoming extremely volatile. It is moving down, and later suddenly there will be a huge bounce back. So that's the reason we also decided to shift more towards intraday in the current market situation, because for positional, it's becoming little tricky because let's say Friday and Monday the market goes down, and Tuesday, Wednesday the market is shooting back up whatever it had lost. So that's the reason we thought of shifting little more towards intraday in such a market condition. As the VIX cools down, it becomes easier for us to trade on intraday. So that is for the market outlook what we have for the coming week. So there is RBI rate decision on Wednesday, and again the funny part is, in spite of having the RBI rate decision, this is only pricing in close to 250 points. So it obviously becomes little challenging to trade, but Bank Nifty as such has little higher premiums. And if you look at the overall picture, as we already mentioned, there is absolutely no stability in the market. There are two big participants, DIIs as well as FIIs, doing the complete opposite thing, that too not at the same time, at two different times. So that is the reason we don't have a clear trend yet. So we don't know whether the market is headed downwards or headed upwards, or it is going to consolidate. My expectation for the markets right now is that the markets might consolidate in a broader range. So for Nifty, I am expecting the consolidation to happen between 17,000 to 18,000 for quite some time. And for Bank Nifty, I am expecting the consolidation between 37,000 to 40,000 for quite some time. So let's see how exactly the things go. So coming to what is happening to our trade, on Thursday we had a loss of close to 30,000, and on Friday we had a profit of close to 50,000. So overall these 2 days put together, we are positive of 20,000, nothing much significant. So with this, now we'll be quickly moving on to the screen recording, where we'll be looking at what exactly the charts are suggesting, as well as what exactly is the open interest data suggesting. Thank you so much for joining, and if you are liking the content, do not forget to hit the like button, share this video, as well as subscribe to Optionables. Thank you so much. So now we are going to do some chart as well as open interest analysis. First we'll be starting off with Bank Nifty, and later we'll move towards Nifty. So when we look at the Bank Nifty overall, Bank Nifty is showing relative strength over Nifty. Because when we look at Nifty, IT stocks are pretty weak, and most of the sectors are not performing well except for banking as well as auto. So banking is relatively stronger over Nifty as a whole. So even SBI results are above estimates, and even Bank of Baroda has come out with pretty good results. So it is important to see how exactly these stocks are going to react tomorrow. SBI stock action is something really important to look for because it has significant weightage in Bank Nifty, and it can literally move Bank Nifty if it wants, right? So now talking about important support as well as resistance levels for Bank Nifty. So the first immediate support is going to come around 38,000. So 38,000 will definitely act as a very strong support for this particular week. And on the higher side, 39,500 would definitely act as a very strong resistance. So overall for this week, I am expecting Bank Nifty to consolidate between 39,500 to 38,000 based on the technicals. So when we actually look at the market, what is happening is in the morning session, usually it will be taken up higher, and later there will be some severe FII selling which will be coming in towards the afternoon, which will push down the stocks. So that's the reason we are not really seeing any strong momentum in any of the stocks except for some auto stocks. So we might not see a huge rally again. So we might witness some sort of consolidation because there is some equal buying and selling coming in. So this is the broader range I'm expecting Bank Nifty to consolidate. And when we talk about open interest, so let me just open interest on Sensible. So here you can see that yesterday there was significant amount of calls compared to puts. That means it is a sort of bearish signal. But the good part is people who had written puts at higher levels didn't actually unwind. So there was no unwinding of put, there was just additional call shorting. So when we look at the overall picture of open interest also, again, it looks more so that people are expecting market to trade in this particular range because at 39,000 we see good amount of calls as well as puts. But one point what we have to make a note of here is the PCR ratio is 0.6. That means you can see totally there are 22 million calls compared to 13 million puts. There is significant call writing compared to puts. So this is something that we have to keep a note of because the overall sentiment in the market is not that bullish. That is clearly seen here because at higher levels we have very strong call writing, and at 40,000 we have the highest call writing. So whenever the market is going up higher, in case if we don't see a lot of put writing happening, there might be some kind of profit booking. So again, broadly, I am expecting this range for the market. But the thing is, in case if it is able to break 39,500, then we will be expecting our next resistance around 40,000. So now we'll also take a quick look at Nifty and see what it is suggesting. So here also we see a similar trend, but the good point here is Nifty is able to hold 17,500. So I don't know if that is going to continue for tomorrow as well. If it does, then it is going to be a pretty significant support for the markets. And from here onwards, we can expect it to stabilize and maybe head up higher. But in case if the selling continues, then we have the next support coming in at 17,300. So it is pretty simple. We are expecting a pretty broad range in Nifty of 17,300 all the way up till 17,700 for this particular week. So we can expect the market to consolidate here. Again, one thing what we have to keep a note of is this: the range keeps on changing based on how the expectation of people keeps on changing. Today, based on the chart pattern or the open interest pattern, we can expect this particular range. Tomorrow, if there is huge sell-off and let's say there is more of bearishness in the market, in that case, obviously this lower range will be shifted much lower, maybe towards 17,200 or 100. So we will also take a quick look at open interest as well. So when we come to Nifty's open interest, yesterday we can see that there was huge amount of call writing compared to put writing. You can see at levels around 18,000, 17,800 as well as 17,600, there was some heavy call writing which happened, and people have created short straddles around 17,500. So at higher levels, there is significant call writing, which will definitely turn out to be resistance. So somewhere around 17,700, 17,800, all these levels are going to act as a very strong resistance for the market. And on the lower side, you can see that there is no significant put writing anywhere, and the PCR ratio is also 0.6, suggesting some sort of bearishness. So it is important for us to see how exactly the market is going to behave. Right now, overall trade is looking pretty bearish. So we have to look and see whether the markets will be able to hold the crucial support levels or not. So now coming to what trades do we actually have. So I will just show it on the chart so it becomes easier for you to visualize. So right now we have 500 quantity of 38,000 puts sold. So 500 quantity of 38,000 puts sold, and we have around 1000 quantity of 39,900 calls sold. So 39,900, 1000 quantity sold. So the reason for this is we are little bearish on the market, but we also feel that there will be some good support coming in at 38,000. So in case, even if the market heads up higher, and let's say we see a closing above 39,000, then I will just short some additional puts to balance out the position. So overall position right now looks pretty bearish because we have a lot of additional calls sold compared to puts. So this is a very simple strangle what we are having, and everything is a naked strangle. We haven't hedged anything. So as I already mentioned, once we see market closing above 39,000, we will be shorting some additional puts. Once market breaks 38,500, we'll be shifting our calls closer into 39,000. From 39,900, we'll shift it closer into 39,000. So this is the idea what we have as of now. With that, we also come to the end of this video. If you have liked the video, then please do hit the like button, share this video, as well as subscribe to Optionables.